General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. It's going to be week 2. January 5th through the 9th. Okay. PMI, non-farm. Then next week is options expiry week. Still CPIs next week too. It is. And Treasury currency report. Let's grab this. So NFP week, Monday, Tuesday, Wednesday, classic trading. Thursday should consolidate before the news, and Friday should be madness. No COT yet until the 28th. Fed watch, they holding rates. This first one, they don't never do nothing in January. But out of habit, still kind of look. Yeah, no change. See what's up with the earnings. Okay. 30% off platform plans for a year. Unusual Wells. Okay. Determine. Nope. Nope. Nothing interesting. No top 10 companies from the NASDAQ reporting this week. What did I do? Bam. Sentiment. This is going to be interesting. Yeah, because the investors got bullish sentiment, but everything on the media is bearish. Media is funny. Poor sentiment. About far. Cash on the side. It's higher than bearish sentiment. Okay. We still only got this one that we watching. Haven't got no other ones yet. I need 9 weeks of days. Let's knock out a top down. Month. Doing this previous month high, previous week high indicator made things so much faster. Interesting way to start a month with the inside month and still an inside month without still putting nobody here. This is giving low resistance liquidity run vibes. Almost too perfect. Is 50% holding the bodies of this? Where did that go? No, but we are at 50% of this body, this candle body range. Like we reaching, but we reaching real slow. We'll see that because that's just showing the low resistance liquidity run. It's locked. So we still need a down candle here. This is so choppy looking. Let me take this off. I'm looking at how the bodies are just holding price. Like this is interesting as well. Like we're holding really tight ranges. Wig. Still like here. This got wig too. There is no liquidity here. Previous when this is gonna move when it shifts. We might gap out of this. This is still the most interesting. After this, I don't think I would look for any more buys. This gap is interesting still. Closed here, opened here. Make this a purple box or something. So this inefficiency, big gap. There's no up candle in this gap. You see that? There's up candle. That is an interesting level. Let's take a look at the daily. Price still holding this area. This is what I'm thinking we need for the rebalance. We're not creating any lower lows. This is a higher low right here still. Invalidation of sales would be where really breaking close here, because it can wick this and still be valid to look for sales, because this could be like a stop hunt. I need 9 weeks of days. Let's get the week. This is the 9. And this is the daily. Just mark this. And then this is just the new week opening gap from a long time ago. Hit that button. This is in an accumulation. I think we wait for news, and over to buy under. I think that would be previous month's low, right? Yeah, this is small month. Previous month's low since December was pretty much accumulation month. Anchor point interaction daily. For the most part, then 60 day yet for a while, and either high or low has been retested. To be proven as an anchor. To be proven as an anchor. Story price alignment. Political. Theater. AI and rare earth. Aztec chokehold. We're definitely engaging. Focus this week. Really Monday through Wednesday. Economic data. Cut out the noise. And then people on TV don't even know what they're talking about. Journal intent, mindset, and daily profiles. Interesting in my deuce. Reaper, Horizon. The Forgotten Arrays. Let me see. Can we go with day trade? Wow. Should be back after market. Not good time for swings. Shit, so no 2%. Just day trade and get out the way. Let the market settle with the drama. I would put Venezuelan drama, but that's a long word that I'm gonna misspell. Our planned strike date is gonna be Wednesday. That's the good news day. Boom. All right, that's that on that. Y'all have a good day.